So welcome back to our weekly Wednesday education webinar. Before we get into it, we're going to talk about how to come back after a loss, and that's something that a lot of traders, especially new traders, have trouble with, because number one, we haven't gotten used to losing yet, and people that's been in trading for a while, they realize that, losing is just part of the business. It's going to happen. Sometimes it's going to happen more than we want it to, but, it's something we have to accept and kind of move on from. And yeah, it can be frustrating. I got really frustrated this morning, but it's just part of the deal. So before we get started, we'll go over my trades from today. So I'll kill two birds with one stone here. The first one, well, I don't have the TIVA chart. I don't know what happened to it. We'll do fold. TIVA, well, I'll use this chart then, since I have it up. Now, all of these were moving pre-market, and they were all biotech stocks, and they were kind of moving. Some had their own catalyst, some were moving in relation to others or in sympathy with others. But these stocks, I really don't like to trade much at the open, especially TIVA, because of how manipulated it is. But I will trade it pre-market. And I got in pre-market. I was expecting to roll over here. Thought we would get through this 1585 level. I know it held here pretty solid, but when we went up and we rejected the 9 and the VWAP and we started to come back, there was no reason why it wouldn't crack through this level. But it held again and it bounced, and I went ahead and took it off. But what got me frustrated on this is this, I was trying to get out practically at break even. When I saw it bounce here and realized that we were not gonna crack this, I started trying to get out, and it wouldn't let me out. It kept saying there was an error, something about buying power, and I'm like, this is stupid, because I'm already in. All I'm trying to do is close my position. But come to find out, there was an issue, with the exchange or whatever it was. But finally got out, and it was at, what was it? I got in at 1608, so I didn't get out until like 1635. So that was a decent loss. It was over 50 bucks, but it was a little decent loss. It was frustrating because I saw it happening, and I knew how these stocks work, and I knew that if it wasn't going, I needed to take it off. But I dealt with that. I had to, go through that. So here, I decided, once I logged off and I logged back on, I was like, well, let me check this thing. So I got in 2 shares of fold just to see, what it was gonna do. So I shorted it, and then I turned around and was sitting there. I was like, hey, this thing might work. So I added 150 shares. Even though this wasn't really a setup, I was, here, we were too far down. it didn't make sense, but it looked like it was gonna maybe roll over here. I was like, well, I'll just add and we'll see. But it kind of traded sideways on me, and I kind of held it at the open and just took it off. Only made 13 cents on it, something like that. No big deal. But then I reset for the open, and I got in here just under the VWAP. This is a little bit early, a little bit early for me, but I was expecting this wash, and I was expecting it to wash all the way down to the 200. So I got in, took it off here. I took half off here, and we started to bounce a little bit. And so I said, as soon as we crack the 5-minute opening range low, I'm gonna add back. And that was the plan. I was gonna add back and then cover some more here at the 200, and then if we came back and claimed this, I was gonna take it off. So it almost worked pretty good. It came down and it tapped this, but we were building in too much support. So I went ahead and took half of it off here, and once we claimed this level, I went ahead and took the rest off. And then again, I waited for the rejection. I got in here, and then just got frustrated with it. It wasn't going anywhere. We were just hanging around, so I just took the rest of it off and just called it a day. The other stock I did, but I'm not upset about this. This was a solid trade here, and yeah, you saw me do something that I don't normally do. I don't normally add back, but what I was doing was adding where I would normally get in. And I would normally get in on the break of the 5-minute opening range low. So I just added back and got in my full position. So it wasn't anything so much out of character for me. It's just, I saw the opportunity, and I wanted to maximize it, because I figured once this opportunity went, we probably wouldn't get anything else the rest of the day. And as you can see, we didn't. I did try a shop, and this is what really upset me for the rest of the day. We got in here on this rejection. This sold off. I waited for the bounce, waited for the rejection. And here, and I gave it a point. I felt a point would be perfect, and we had a lot of room over the VWAP. So I felt that I was pretty safe, if we bounced here. But sure enough, we bounced, took me out, and then it made the move down to the 50-day from the daily, which is what I was looking for. That was a pretty huge move, and would have been nice on 50 shares. But I didn't re-engage, and then after lunch, I didn't even re-engage again, because mentally, I was pretty much beat up, and you can see I could have re-engaged, and we got all the way down to this 101 level or 180, and that's where we bounced. So this was a solid trade. So this is the second time this week I missed a pretty huge trade. I missed the opening trade Monday, and that would have been good. This would have been solid. I'd have had a solid week. Now, I don't even know if I made $100 this week in the last 3 days. That's just how, sad it's been for me. And that's not to say there are not opportunities out there, because, there's a whole lot of different strategies, and people trade differently. And some people's strategies are working better than mine. Some people trade the smaller cap stocks, and they're offering some better opportunities now. But that's just not my wheelhouse. And so we're gonna go through these periods where there's gonna be a couple days where what I trade may be slow. So tomorrow and Friday, you never know. I may have a big trade and it makes my week. Or may have two big trades in the morning and it makes my week. It's happened before. I've been red up until Friday, and then I have a big trade and I end up green. I don't give up on the week, until the bell rings. But I'm leaving early Friday, so we'll be shutting down. We'll be running a half a day on Friday, which, judging by the last couple of Fridays, is not a bad. We're not going to miss anything. But that morning, I'm expecting it to. I'm going to be engaged and looking for some moves tomorrow morning and Friday morning. But I just feel like I'm being tested early. Because I talk so much about being disciplined and not getting outside of myself and staying focused and true to myself, this last quarter. So I'm really, really being tested these first 3 days. So far I feel like I passed the test. So hopefully I won't be tested anymore. But, we'll see. Alright, so let's get into our presentation today. Now, does anybody have any questions about my sad day of trading? I had one solid trade, but the rest of the day was sad for me. The way it's set up pre-market, this is usually how it sets up when we get a sell-off at the open. Where it is, let me get the chart back up here. This is usually the way it sets up. We get a sell-off, and then we kind of hold under the moving averages, and we get, we're trending down. And then the open happens. Sometimes it'll push up a little bit to the 20, and then we'll get that big sell-off. And it did push up a little bit, and that's what caused me just to take off this little position so that I could reset, and get in the way I wanted to get in. But this is what I look for in pre-market, which is this is a bear flag pretty much. And that's what it's set up on. So I got in here risking off of the VWAP. Had this thing run away from me, I would just stop out. I know this is a little bit faster pace, but when I see a setup like this, I'm going to jump on it. And then just add back just like I normally would and be in full size for the opening range breakdown. And then just trade that strategy. You mean on the... No, Shop came on. It was a breaking news play. Shop wasn't on the scanner. It was a breaking news play that came in right before lunch. So what, the indicator at the open or at pre-market? At the open, I'm going to use the VWAP. I'm not going to use the 9 or the 20. I'm going to use the VWAP at the open. And then I'll use the 9 for trend continuation. That's where I put, most of my emphasis on the 9. It's going to be in trend continuation and then using it as a trailing stop. All right, so like I was saying before, we're gonna have losses. Just like me this morning, my first trade was a loss. And on top of that, it was a worse loss than I wanted it to be because I had trouble getting out of the position. But what helped me get over it was the fact that I accepted responsibility for that trade because, number one, I know it's pre-market, and strange things can happen pre-market, and a stock can just blow the top off out of nowhere. So I'm accepting that risk, going in. Now, yeah, I'm going to get upset because when I want to do something, it doesn't do it when I exactly want to do it. I may get upset, but there's a way that I have to deal with being upset so that I could come back and make sure I can re-engage. So today, for me, looking back over today, and I'm going to look at it a little bit better tonight when I reflect on my trades. But from what I'm thinking now is that I was still affected by the pre-market this morning. And some of the things I did really didn't make sense. Like, why would I take a two share trade? Just to test something. I mean, now thinking about it, it made sense at the time because I don't know. I guess it didn't make sense at the time. But, I was just checking because I didn't want to wait until it opened to find out I was having problems with my platform. So I was willing to give up a couple of cents or a couple of dollars to, test it out. And then I guess I came to my senses and said, well, look, you might as well do something because this is stupid. And, went from there. So I did kind of come back in and get my head screwed on straight. But then, that Shop deal kind of pushed me over the edge. So the smartest thing for me to do was to shut down after, my second trade on fold wasn't really following through, and I just took it off. So it was time to stop. But how we come back is really important. So every trader, we're gonna face losses. There's no way. I just can't see it. Because if a computer can't win 100% of the time in the market, how can a person do it? So nobody's going to be 100% correct. We all going to make a mistake here or there, no matter how good we are in reading the market and interpreting the price action. We're all going to make mistakes, or things are going to happen like what happened this morning. The platform or what they say, the market was kind of out of whack, or the exchange. So people are going to lose. So sometimes we're going to have big losses or defining losses in our trading career. Sometimes we're just going to have the normal routine loss. But either way, whether you're bouncing back after a big loss or a small loss, there has to be a process to it. And the mental part of it is what really hurts us. And that's why, I'm offering the day trading psychology course to you guys, because it's that important. That's why I made it a part of the fourth quarter promotion that I did. The challenge that we have. That's why it's a part of the day trading class and a part of the swing trading class. Which I feel is very important, because I keep saying it. Learning the setups and learning the fundamentals is easy. It's just like us going to school and learning the basics on things. But the problem comes in, and the challenge comes in, is executing and implementing these things. That's where the mental stress comes in. And when we have so many losses in a row, we can't seem to get out of our own way, then it kills our confidence. And then we start doubting ourselves. And then all of those naysayers that told us we were going to lose all our damn money in the market, we start to believe them. And we start to believe that they're right. But when in reality, it's not that. It's just that you have not received the proper education to help you overcome the mental challenges that you're going to face. Because trading goes against our human nature. If you haven't realized it yet, you soon will. We are programmed to protect ourselves. That fear brings in that fight or flight mentality. Flight is what takes us out of trades before they work. Fight is what keeps us in losing trades and blowing our account up. So that mechanism has to be controlled, and it has to be dealt with. So the successful traders, they have the right confidence, and that's what that psychology workshop is geared toward, is to help you develop the right confidence so that you're not trading in fear, and that when you see the setups, you're ready to take advantage of them, and that you are disciplined enough to stick to your risk management plan so that when you reach your loss, you cut it off. And sitting on your hands when the market dictates, which is what I did yesterday. So outside of playing with that $5 stock early in the morning, which was stupid. But, sometimes we do stupid things. I was smart enough that when the market opened, we quit playing. I quit playing with it. I just need to quit playing with my account in the morning. That's what I need to do. But we have to sit on our hands. Whenever the market dictates, we have to sit on our hands. So after a losing streak, or if we have a big loss, and here's what happens a lot of times. We do good for a couple of days. We got a good week going. We're up a couple $100. Whereas the previous months, we've just been losing. Red week after red week after red week. And we were like, man, we got this. I got this. And you step up. You step up the game a little bit. And you're not ready for it. And you have a little bit more size in. and emotionally you're not ready to handle it, and you take a big loss, or you start a losing streak. It's like every time you get in a trade, it goes the other way. Everyone you pick seems to be the wrong one, and you start to question yourself again. And that questioning leads you to getting out of trades too early. You start looking at your P&L saying, as soon as I get $25, I'm taking it off. And you get out of trades too early. Or you don't want to take a loss, so you hold on to them to see if they're going to come back. You keep bumping up your technical stop. At first it was going to be the 9. Then it's going to be the 20. Then, if it loses VWAP, then I'll take it off. By then, you've lost 3 times more money than you wanted to lose to start with. Then you start skipping trades because you don't want to lose. And that keeps you from pulling the trigger. Or that fight mentality is going to get you into more trades than you should. And you end up with 50 tickets at the end of the day and a $200 commission bill. So if you experience these issues, there are ways that you can get back on track. So don't fear. You can get yourself back. Every trader has bad days. You see, and that's the big reason why I like to have my account open, so that when I am trading, when I do have bad days, you can see it and you can see how I deal with it. Because you're going to have to come up with the way to deal with the bad days yourself. And as a rule, you never let a bad day cost you more than you make on an average profitable day. Okay, so this only works if you're profitable already. If you're not profitable, then you're just going to have to come up with the number. So if you average over time like $200 a day on your winning days, then on your bad day, you don't want to lose any more than that. You have to control your downside. And a lot of times when traders are not making money, they're red every day, or on average they're red every day, I suggest that one and done strategy. You trade one time. If you lose on that one trade, yeah, you can look at another one. If you lose again, you're done. If you win on the first trade and you hit your target, you make your money, stop trading live money. Just stop. And if you do that over a period of time, in a week, you'll end up most likely having your first green week. And you're controlling your downside by cutting your exposure to the market when there's less chance of you making money. Yeah, we're going to get big news plays like Shop today. They don't happen every day, but they can happen. And there's nothing wrong with you waiting until that happens and cutting your platform on. But chasing stocks down all day is not a profitable strategy. So if you take a big loss, it causes all kinds of inner conflict in us. We either want revenge, or we get scared to trade it again. We get angry. We get frustrated. We get mad at ourselves. I slapped myself one time. That's how bad it got in the beginning, before I was able to understand what was going on. Then you hate the market. You hate your broker. And you hate me. And the list keeps going on and on and on. But we can't take that personally that way. We can't take that in and then start trying to blame everybody or find reasons that we didn't do it and just stop liking everything. That's the worst response we can have. So these are the emotions that we have to deal with. And the first thing in dealing with these emotions is accepting all the responsibility for our trading, whether it's wins, losses, it doesn't matter. We have to accept the responsibility, for our trading. After a big loss, it's no way to trade with a clear head. Some people can be an Iceman. 1% of the population can beat a polygraph test. You may be one of those people, but I doubt it. So it's very difficult once we lose or once we, get stopped out of a trade and then it works and does exactly what we want it to do and we didn't have the wherewithal to get back in. We get frustrated. But we have to realize there are more than 250 trading days in a year. There's no rush to get back in that day. Just because I stopped trading today doesn't mean I quit. I'm being smart because I recognize that I'm not in control of my emotions. And if I'm not in control of my emotions, there's nowhere in the world I need to be putting my money on the line. You have to be that smart. You have to develop that discipline. Understand you're not quitting. Just know today is the day not to come back. You turn your platform off. Okay? And this is what I do. I'll turn my platform off. I'll take a bike ride. Or I'll watch a movie. I build models. Or, lately I've just been restoring. I'm buying RC cars on the internet, junk, and I'm restoring them and then selling them. I'm not really making any money off of it, but what it's doing is, it's helping me keep an even keel during the day. So that if something does happen in a day like today, I could go work on the car, a RC car. I could sit right here and tinker with it and do what I need to do. Find out what I need, look up the parts and order them. It keeps me grounded. And that's what you have to do. Don't worry about it. Now, if I wasn't, running the chat room, I wouldn't have none of this on. I would close it and go. But I'm running the chat room. And it did take me a while to build up the discipline to have all of this on and not trade, because it was tough at first. That I had all these charts going. I was looking at what's happening in the market, seeing the stock move, and I'm like, I got to get back in and get this. And I end up losing. And that's, so that was one of the things I had to deal with. Excuse me. One of the things I had to deal with up front. But, we have to come up with a process to help us calm down when we have these issues. And again, we have to accept the responsibility of the loss. Maybe it was just a bad few days in the market. We've had a couple of bad days. And I'm frustrated at myself because the one or two good trades that were there I missed. And I should have gotten them. But I accept the responsibility. The only person I can blame is me. It may have been your biggest single loss ever. It could be a life-altering loss. You might have been short and you lost more than what you had in your account. No matter what, you got to accept responsibility for it. And until we do, there's no way we're going to recover from it. If we still blaming it on somebody else other than accepting the responsibility that I took the risk and it didn't work out and I lost, now I have to deal with it, you're never going to get over the losses. It doesn't matter if surprise news came out or technology failure. or, you know, whatever happened. We see a lot of manipulation on these lower priced biotech stocks. I mean, they're very fluid, and these funds, they make a ton of money on them. But you can always find an excuse why you lost a trade, and some are good. But like if your internet connection goes out, I mean, what are you gonna do? That's a valid excuse, but we've got to accept that risk. That's something that we have to do. And then we can figure out what could we've done differently. This is going to help us reduce the chance of it happening again. And it's also healthier than just bottling it up and then just blaming everybody. Blaming, Ed, he's stupid for taking that trade, and I followed him. I don't know what the heck he's doing. I think he's lost. And then Sure Trader, oh man, and we sit there and we just blame everybody. And blaming everybody else, it is admitting that you don't control your own trading. And if that's the case, why are you trading? If you're not in control, you shouldn't be trading at all. So if you control your trading, you can fix it. If others are in control of your trading, you can't fix a thing. You're at the mercy of any and everybody. And that's a recipe for disaster. Okay, so there's, I wouldn't say thousands of scenarios that can cause a big loss in trading. But there's a bunch of scenarios that could happen. So you have to ask yourself these questions. What happened? How could it have been prevented or minimized? What can I do to change? Or what do I need to fix to keep this from happening again? Do I need to have a tablet up here that has a mobile that works off a mobile hotspot or something, so that if I do lose connection, I could quickly log in and manage my position? A lot of things that happen, we can fix if we just take the time to think about it and move forward. Now, I've shared this with you guys before, and so I'm not going to talk about it. I'm not going to spend too much time on it. But this model works, and the people that has used it and have adopted it, their trading has gotten a whole lot better and a whole lot cleaner, because all you're doing is you're going through this model and you're answering these questions. And this is what your journal should look like. You should talk about, obviously you're going to write down the trade, the strategy, your entry and exit, what you made or lost on it, and all that. But you're going to describe what was the results of the trade. You're going to write it out. This is a detailed description of what happened. You're going to talk about what your feelings were during the trade. What made you uncomfortable? Or what did you see in the market that made you uncomfortable? What happened? Do you feel good about the results? These are the things you want to write down in that paragraph. And then the next one, what was actually good or bad about the trade? Did you have a good entry? Did you have a good exit? Was your trade plan good? Did it make sense according to how the chart was set up? And then analyze the trade afterwards. Did the trade make sense? Did I take a trade that didn't have enough profit potential? Did I get in a trade risking 20 cents and I could only make 20 cents? I didn't see it at the time, but now, I see it. This trade didn't make sense. And then you're going to, do your conclusion. A lot of times the analysis and conclusion runs together. But then you're going to build an action plan. How are you going to avoid the mistakes next time? Or if it's a good trade, how are you going to make sure you get the same results? These are key. These are key things that we need to focus on when we're analyzing our day, when we're analyzing our trade. And if we don't have a structured model, it's going to be very difficult for us to get to the next level in our trading. So fixing that issue is just step one. Now you got to deal with the lack of confidence that you have. Okay, you know what you're not going to do, and you figured out how you're not going to do it, how you're going to make yourself not make that mistake again. Now you got to deal with your confidence. So what you can do is go back to what made you successful to start with. Guys, this is why I preach so hard that you need to start small and build a solid foundation. Because when you get out here and you start moving further and further ahead, you're going to get lost. There are going to be times where you get lost and you lose your confidence. The best way to get it back is to go back to the beginning. I demonstrated that last month, when I got out of my mind. I got out of sorts, and I had to stop and go back to the beginning. And I did, and I had an awesome 2 weeks and built my confidence back up. So you develop healthy confidence over time by building your trading system, testing it, practicing it. And when you start really making money with it, you're going to know you could always come back to this. Just you have that in your back pocket. Confidence is created by doing difficult tasks and then getting better at those. In trading, our task is to implement and execute our trading plan. As we execute and we stick to our trading plan, our confidence grows as we see positive results. If you're used to ending the week red and then you all of a sudden end the week with $150 profit, your confidence is going to grow. Because all of these other weeks you were red. Now you're making a little bit of money. And if you can put 3 or 4 weeks together like that, you just keep developing your confidence. Yeah, you can't go too far ahead of yourself. You don't want to do that. But you want to get that slow, steady growth. After a big loss, you want to get back to the basics. Focus on your trading plan. And if you have to make adjustments to it based on your troubles, focus on that, making sure that you're implementing your adjustments. You want to get back to really digging in and getting to know your strategy. That's key. That's what's important here. Is really going back to you, getting to know yourself, and this is not working right. All right. So we go back to practice and building our confidence. Now, after a big loss, a losing streak, obviously your confidence is going to be low. Your mind is not going to be right for trading. And if you don't have a clear mind, you can make silly mistakes. You see that happen with me. None of those things are good. So you want to take a step back If you need to trade in the simulator or paper trade for a couple days, then do it. There's nothing wrong with it. Remember, there's over 250 trading days in a year. And there are going to be moves out there you can get. But if you don't have any money left, you won't be able to trade them. There's also not as much pressure, so it's easy just to focus on hitting your marks and not worry about the money. Because what we're doing is we're developing our skill. That's why we trade for skill and not for money. Again, we trade for skill and not for money. We want to start back small. After a few winning days in the simulator or paper trading, you're getting better. You're getting in a better space mentally, and you're ready to ease back in. So start small. Like if you had made it up to trading 500 to 1,000 shares, you need to start back over with 100 and then ease your way back up again. A winning day with a small position size is going to continue to help you build that confidence. And then you could gradually increase it till you get back to where you were comfortable. And if you have a losing day, then losing with a small position sizes, you should be able to deal with that. But if you come back full and you take a nice hit, your confidence is really going to be at an all-time low. So to definitely get back to live trading at a slower pace. If you're feeling really beaten up, spend some time in the simulator. Even take some days off from the market, period, and then come back. And then when you come back to live trading, start small, slowly increase your position size. Do it in increments. So it may take a week or 2 weeks to get back, but you have to do it. You have to take your time. All right, so to summarize this, if you've just taken a big hit or you're on a losing streak, stop trading for a couple of days. You're not in the right mindset. So when you come back, you look at your trading plan, look at your trading, go through that reflection model to really dig into your trading and find these issues. And then address those issues and practice in the simulator to make sure that you're not doing those things anymore. And then once you have a couple profitable days and you feel like yourself again, then come back. And when switching to live trading, keep your position sizes smaller, because at this point, making money is not the goal. The goal is to build your confidence and your skill so that you can implement your trading plan. Then you can slowly get back to normal. That's what we're doing here. Because it doesn't matter how slow you go as long as you don't stop. So move as slow as you can without stopping. All right, does anybody have any questions? Now the Day Traders Mindset Workshop will start next Thursday in the classroom. So you guys that signed up for the fourth quarter deal, you're gonna get your credentials next week. So it starts next Thursday at 4:30, and I will have It will be recorded. I'm sorry. I've got a massive headache. I had a sinus infection. Now I've got it. All right, Lee, are you rubbing it in? It's been slow this week. It's really been slow. We've had some good moves. Monday, I missed the trade at the open. Today, I missed shot. That was a good news play. I did have one good trade today on fold, which felt pretty good, but the market is just not a comforting place right now. Timestamp for fold at the open. It's gonna be right here, 9:30:38. No, that's when I bought. That's when I closed it. 9:32:04 at 16:34. That's when I got in fold right there. This is where I closed out this crazy mess I was doing. This was just stupid. I shouldn't do this live, but I kind of would rather do this pre-market than try to get in something at the open and miss it like I did Monday. Because the reason why I missed that big trade Monday is because my buying power was messed up, and I didn't know that. And so by the time I reset my platform, it was too late. Oh, the day trader's mindset. It's the trading psychology course. It's 4 classes. We're going to start next Thursday. I'm going to be on the road this Thursday. I got to go get my daughter, so we're going to meet her. She's in a musical. So I have to take off right after the open, or else we would start this Thursday. But next Thursday is when we're going to start that course. You're welcome. All right, I'm going to stop this recording and I'll keep answering questions. I don't want to make it too long.